You may learn about investing and how to make the best financial decisions for your life on Investor Facts. Make sure you click the subscription button and enable the notification bell if you haven't already. Share, like, and comment. An excellent place to start investing in stocks with high dividend yields because they can offer a consistent income flow without the risk of suffering a significant loss. But it's difficult to locate excellent ones. Therefore, knowing what to look for in a stock with a high dividend yield is useful. Although everything has gone terribly in the stock sector this year, other dividend shareholders have already noticed some extremely positive developments. We've also been ready to reinvest and buy more stocks on our favorite dividend-paying firms at a discount as a consequence of it. Additionally, given the fact that stock values have fallen so significantly this year in almost all market sectors, several investments have significantly boosted their annual payouts. Collecting dividends from these stocks with yield of 10% or higher is a truly fantastic method to increase your income, and that's what we'll discuss in today's video. Having that said, let's move on and begin. ORCC is the ticker symbol for Owl Rock Capital Corporation, the first stock we're looking at. This corporation specializes in business development and invests in senior protected or unsecured loans, subordinated loans, and equity-related securities like warrants and preference shares. Owl Rock invests in U.S. companies with a year EBITDA between $10 million and $250 million and or yearly sales between $50 million and $2.5 billion in order to support growth through acquisitions, expansions, and refinancing. It is managed and operated by Blue Owl, a sizable specialist finance corporation with resources under control totaling more than $95 billion. The stock today has a price per share of 13.8 cents and a dividend yield of 10.9 cents. The company declared before this month that it was boosting its quarterly dividend payment for the first time in history to now be 33 cents per share. In addition, the business disclosed that it would issue a special dividend of 3 cents per share this month. Throughout their IPO in 2019, Owl Rock has consistently paid 30 cents per share on a quarterly basis. You can check their dividend distribution graph. In the past, they have paid special dividends, but not since 2020. By chance, this chart simply displays the company's most current special dividend. Yet, it has paid several special dividends in the past, ranging from 4 cents to 8 cents per share. When I first learned about this company a few years ago, I thought it had a lot of potential, despite the fact that their stock was only launched 3 years ago. Owl Rock is now one of the industry's top company growth firms. They were much bigger than most BDCs as of the third quarter of this year, with a total asset size of $12.8 billion, but they were still far behind Ares Capital, which at the time had a total portfolio worth of $21.3 billion. They might actually be the third largest BDC according to my latest check. However, they have 180 firms in which they have investments, and 87% of their loans are senior secured, which has remained fairly constant since their IPO. About 98% of mortgages have variable rates. The second stock we're going to check out, Triple Point Venture Growth, recently increased its payout to an all-time high. Another company development firm that focuses on funding investment capital-backed business throughout their growth phase. This organization, which was created in 2013, offers venture development sector enterprises financial funding in the form of development capital loans, secured and customized loans, equipment financing, and direct ownership investments. Their sponsor, Triple Point Capital, which has been in operation since 2006 and has its headquarters in Menlo Park, California, officially manages them. Triple Point officially declared an increase from 36 cents per share to about 37 cents per share, which is not really substantial rise, But a dividend raise is always welcome after more than 8 years of no dividend increase. Similar to Owl Rock, the corporation has also given special dividends in the past, although none have been declared since 2020. As you can see, throughout the past 5 years, their dividend payments have remained quite consistent, except for the unusual special payout. However, starting with the upcoming quarter, they will be increasing their payouts, and ideally, they will be able to keep them at this pace going forward. Nevertheless, according to Google, the company actually offers a dividend yield of 11.31% and trades for $13.08 per share. As I've mentioned previously, the development of Triple Point Venture differs slightly from that of the majority of BDCs we've encountered. Similarly to a few other BDCs, such as Hercules Capital, they choose to primarily concentrate on technology, the life sciences, and other high-growth industries. The Triple Point will only make loans to businesses that have venture capital backing and are in the venture growth stage. Whenever a firm has recently established themselves and as having reached a significant degree of progress and is looking for further capital to pursue their business expansion, it is a very specific time in the startup phase. Essentially, Triple Point must first establish a significant number of track records in a company before granting financial for one. Some company growth organizations have capital to assist a firm grow at different phases or to help it restructure itself out of a difficult situation. For those kinds of businesses, the Triple Point is useless. Therefore, in a way, this does provide more safety because Triple Point would have to show a lot of proof that they are already quite successful in order to even consider granting business financing. By offering businesses adaptable and creative financing solutions, such as first and second lien loans, unsecured and mezzanine loans, and chosen equity, Oaktree aims to produce present income and capital appreciation. They make investments in businesses with enterprise value of $20 to $150 million and inhibited values of $3 to $50 million. Another BDC that was established in 2008, right before the worst of the financial crisis, is Oaktree Specialty Lending. They presently offer 10.08% dividend yield, and their stock is trading for 7.14 cents per share, as per Google. The business declared on November 15 that it was raising its quarterly dividend once more to 18 cents per share. Throughout the past few years, OCSL has actually been pretty good firm in terms of dividend growth. It should be noted that they did also declare a special dividend of 14 cents per share, which is payable at the same time as the regular quarterly payout. Since September of 2020, their dividend has increased in every quarter. According to their website, this is the company's first special dividend release in more than 4 years. The history of Oaktree Specialty Lending is very intriguing because the business, as it is now, is much different from what it was when it was initially established. You can observe that their company's share price flatlined for a few years after its 2008 IPO, when it began trading at about 11 per share. However, the company's share price and dividend payouts began to trend down early in late 2012. It persisted right up until around 2019, when Brookfield, a significant Canadian asset management company, intervened and ultimately bought 61.2% of this business. The share price increased by approximately 40% from the time Brookfield took over in September of that year until 2022, when the market as a whole began to decline. However, as of June of this year, Oaktree had investment in 151 companies totaling over $2.6 billion. Relative to unsecured and equity investments, senior secured loans account for 87% of their investments. Their major stake application software, followed by pharmaceuticals, data processing, and outsourcing services, like many other BDCs, Oaktree has a sizable portion of its portfolio, or around 88%, made up of floating rate loans. After all, these are the three firms that I can suggest with because they constantly show extremely great outcomes. Plus, I've been satisfied with how they've performed. If you purchase any of these stocks, I'm confident that you've been pleased with the least increase in dividend payment as well. Thanks for watching the entire clip. If you like it, kindly let us know by hitting the like and subscribe buttons. Also, don't forget to enable the notification bell so you can be the first to know when we post a new video. In the following video, I'll see you. Goodbye.